Hello, everybody. Welcome back. Brandon, thank you for coming on today.
Thanks for having me. Glad to be back.
Yeah, yeah, this isn't your first time on this show. So, yes, but I brought you back on today because we're talking about VA loans. And the thing is, people who are qualified or who can qualify for a VA loan normally know what they are and some of the very basic things that are positive about them. But I don't think they necessarily know the ins and outs. And just for people to know, for context, you and I actually did a VA loan together with clients of ours last spring, and we'll get more into the specifics of it later. But that's why I wanted you on today, because you and I can both speak to this particular example we have, but also I know you do a lot of VA loans in the area. So again, thanks for coming on.
Yeah, again, thanks for having me. Yeah, it's
Yeah.
we've had the pleasure of doing a fun one on a condo, which we'll get into as well. But yeah, VA loans are definitely probably my favorite type of loan to do, just because of the cool features they have, which we'll talk about, and the people that we're working with who have earned this cool benefit. So
Yeah. Well, okay. So we may have people listening today who don't qualify for VA loans, but they've heard about them and they're just curious. So why don't we start? Maybe you can tell everybody, like, what is a VA loan?
So VA loan is a benefit for military people, service members, and veterans, whether active duty or retired. So and it allows them to purchase a home with 0% down, which is an awesome feature. Makes it very affordable, and it also generally they have lower interest rates, which they do right now, which is awesome as well. Getting into the nerdier side of the loans, there's no mortgage insurance. There's a lot of cool features of the loan that make it beneficial and help with affordability for our veterans.
So let's go into them. I mean, you said a lower interest rate, which is great because sometimes people can get put into loans. So if we talk about conforming normal, X% down loans, usually the more you put down and the better your credit, the lower your rate can be, right?
Correct. Yep. As a general rule of thumb. Yep.
Right. And so with VA loans, I mean, is there an approximate amount they're normally lower, or does that completely depend on the market?
It really depends on the market. Just as a ballpark example, right now, conforming interest rates are in the sixes and VA rates are in the fives. That's just kind of really very broad numbers. So they're significantly lower, and there's no mortgage insurance. So if you put 0% down, you're not having an extra fee added on top of your monthly payment. Whereas with a conventional loan, you're going to have some type of mortgage insurance, which is usually done in the form of a monthly premium that you're also paying with your mortgage for the money that you borrowed. So again, that helps with affordability. And then when you're qualifying for a VA loan, we use a debt to income ratio to qualify to calculate affordability and what somebody can be approved for. The maximum that your debt to income ratio can be on a VA loan and still be approved is actually higher than with a conventional loan. So very flexible and very helpful for people, especially in this market where you may be trying to buy before you sell. It's nice to have that as an option so that you don't have to sell first.
Yeah. Okay, so let's just keep like listing the positives while we're here. So you have lower interest rates. You have just keep going.
Let's see. You can use this benefit more than once. If you've bought a VA loan in the past, if you've used the VA loan to buy a home in the past, and you want to use it again, you can. You can have more than one at the same time as well. There's a limit on how much you have a certain amount of entitlement that you can use. So really, depending on what county you're buying in, getting into the nerdier side of things, you may max out that entitlement at some point, but there's no limit on how many VA loans you can have. And again, that gets into the helpful part of buying before you sell, especially in our market where we have a high cost area and higher loan amounts that people can use with that entitlement.
So so if the rates change for VA loans just like they do for normal conventional loans or ARMs, can you transfer a VA loan from person to person and keep the same rate, or is there anything like that that people can do?
Yes, so that's the VA loan is assumable, which is one of these things that for years I'm sure you heard as well in our industry. People say, "Oh, well, they're assumable," but a lot of people also said, "Well, when would you ever use that?" Nobody's ever used that since the 80s or the 90s. Well, they're very popular right now. So if a lot of my military clients that I'm working with, um, we're pre-approving them to purchase, but at the same time, they're also looking for listings that are another veteran that's selling their home, and they're marketing this assumability of their current loan because they may have a 2 or 3% interest rate that somebody can take over, which is attractive as well. So it's definitely a
Well, I
great
mean, right.
feature.
Yeah, I mean, right now in the market, we're talking spring here for anybody who listens to this down the road, but rates are obviously a lot higher than they were a year ago, and they're in the sixes, like you said. And one of the reasons why we have a housing shortage is because sellers or people who live here, if they were thinking about upgrading, they are really kind of nervous to do it, not because they think their house won't sell. On the contrary, their house probably will sell for over ask with maybe no contingencies
Very
right now.
quickly.
But then they have to buy another place at double the interest rate. And assumably, if they're upgrading, it would already cost more. So their payment would go up. And so then they've got this double whammy. I've had people verbatim tell me this multiple times. People who about a year and a half ago were like, yes, 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 we're selling. And now they're not. And so with the VA loan, same thing. I've seen even more ads in like bold letters telling you that they have an assumable VA loan. Of course, that doesn't mean you can only get a VA loan in that property. So people can go in and get conventional, but it certainly is a marketing standpoint, especially right now. So,
Absolutely, absolutely. And
yeah.
you don't have to be a veteran to assume the loan, but it does help the seller tremendously if you are, so that they can free up their entitlement for the next property that they want to buy as well.
So
Um,
explain the entitlement parts a little bit if you can, because even that confused me in the beginning.
so the entitlement is basically the budget that you have that you can use on these VA loans. So if you have part of your budget that's tied up on this home that you own, and you're trying to go buy another home, let's say you've used half of your entitlement on the current home that you own, you may not have enough left over to go buy another property. Or if you want to buy, in the future, it'll still be tied up if it's still attached to that old property that you let somebody assume.
Okay, so if it is assumed, that still counts towards your entitlement, not the buyer who might be, if that person is entitled to get a VA loan, it's not counting towards the buyers in that case. Or is it
As
counting
long
towards
as the
both?
person assuming it is a veteran, then yes, then you get your entitlement back.
I
If
see, I
they're
see, I
not a
see. But
veteran,
if,
which can
okay,
happen, then your entitlement will be tied up until they either refinance out of that loan or sell it. So yeah,
got it.
there's two big things that I've talked about this a lot because they're so popular right now. There's two big things that happen whenever a loan gets assumed that need to happen to protect the seller. One is getting restoring their entitlement, getting that entitlement back from the loan that they had, and then two is the release of liability to make sure that they're no longer liable for that loan. Because if that doesn't happen, and the new owner misses a payment or defaults on the loan, and the release of liability never happened, it comes back on that seller that let them assume the loan. So
So is that just part of like the title process, and like that's what the company is doing to make sure all of that
that's part of the
legalese is
paperwork
happen?
with the current loan servicer that's walking them through the assumption process.
Got it. Got it. Got it. Okay, so before we start moving on to maybe some of the downsides or complications that can happen, are there any other positives that you want to mention or that you can think of?
Um, one of the what I think is one of the best features on a VA loan is something called the Tidewater. Are you familiar with Tidewater? So
No,
Tidewater
educate
has to
me.
do with the appraisal process of VA loans. And a VA appraiser goes out to do the appraisal, and they think that the value may come in low, they are required to reach out and let everybody know that, hey, this value is not supported based on what I have right now. And there's a 48-hour period that they allow you to submit additional information. So some people, I don't even know who some people are, but sometimes this can be looked at as a hassle. But if it was me, I wish this happened on every loan. If you're going to get a heads up before, an appraisal comes in low, not that it happens very often in our area, but it'd be nice to have a heads up and a chance to kind of fix that before it does actually happen and become a problem.
Actually, I'm going to give you guys a little side story right now. An appraisal did come in low in a listing that just closed for me yesterday or the day before. It was obscenely low. It was what the buyer's agent and I said was probably the worst appraisal we had ever seen in both of our careers. And just so everybody's listening understands, as the listing agent, which this was me in this case, you can either meet the appraiser, you can supply information to tell them why you think the price is warranted. And we had escalated, the price had been escalated a lot on mine, so I was not sure if it was going to appraise, but I thought it would be maybe kind of halfway in the middle between the list price and the closing price. And it appraised for less than the list price, which was unbelievable to me. So, I don't, as a listing agent, I don't actually have to know that necessarily. It's for the buyer and for their loan. And so I checked in, I said, how'd it go? And the agent told me, and I was like floored. So we actually had to move closing because we wanted to give the buyer time to go back and ask for a reappraisal. But very infrequently where will an appraiser change his or her decision on that. I've never actually seen it happen. So to your point, that is a huge benefit because, luckily in the case of my seller, the buyer who had this massively low appraisal had come in with a decent amount of cash so they could cover that difference and the loan and the transaction didn't totally fall apart. But I mean, from like a human standpoint, I felt bad for the buyer because I thought that was completely wrong. I mean, I knew it was wrong. I supplemented so much information to explain how, first and foremost, the original, what happened. And then when they resubmitted, I gave them even more information. So for those of you who are listening, not to scare you about the general appraisal process, because we're giving you like an extreme kind of situation here.
Yeah.
Yeah, I mean, I didn't know that, and I think that's amazing because it's almost like it sounds like they're welcoming any data and information, and that is so incredibly awesome here because in this area, comps are kind of good, but like it depends like what's inside of a house or like the specifics and the about each house really come into play when you're appraising, in my opinion. It's not just like what you see on an MLS printout.
Yep. Yep. And to go one step further on this, so you get a chance to remedy it up front, but also I'm a certified veteran lending specialist with the National Association of Mortgage Bankers, and in one of my classes, I don't remember the exact statistic off the top of my head, but I think it was somewhere near 60 or 70% of low appraisals that were disputed on VA loans are actually the value is increased on. So that's an encouraging number as well, to make you feel better that at least if there was something that came in low, you have a good chance of trying to get a better result out of it.
Yeah, that's amazing.
Yeah,
I would say that's like one of the best benefits.
it was like
Yeah,
a
maybe I'm just
jaw-dropping statistic that I heard, and I was like, wow, I was very
yeah.
impressed with
I mean,
that.
maybe it's just because I'm coming off of this last transaction, but to me, that's
Yeah,
really awesome.
yeah.
Okay, so that was another pro. Was there anything else before we move on to some of the
Another
potential
pro
downsides?
is there is no loan limit for VA loans. There is no maximum loan amount. You can go as high as you like. The most I've done, I think I did a $1.7 million VA loan last year, a purchase in Georgetown. Um, you know, so I've had a coworker here had a 2.4 loan last year. So there's no limit. The 1.7 that I helped a client with last year was 0% down. He had I think he put $80,000 down on as his earnest money deposit, and he got like $30,000 or $40,000 back at closing because he didn't need to bring.
Mm-hmm.
It's crazy. Um,
Mm-hmm.
yeah, so that's another big benefit, especially in our area. You have high valued, high cost area. You want to be able to not be limited by the type of loan that you're getting.
Yeah. Are closing costs approximately the same, or are they different as well?
They're generally similar. The only difference would be that the VA loans require a funding fee. And we just got an announcement last week that VA funding fees are going to be reduced starting on April 7th. So that's great news for veterans and affordability as well. But it can range anywhere from like 1.25% of the loan amount to I think the maximum now is going to be like 3.3%, and it's really based on if it's your first time using it, you get a little bit of a discount. And then if you're putting 5% down, you get a little bit more of a discount. And if you put 10% down, you get even more of a discount on that funding fee. And if you have any type of disability rating by the VA whatsoever, then that fee is also waived. So, a lot of times you'll see if a client has a disability rating, then that fee gets waived. And on top of that, in our local areas in Maryland and Virginia, they are also exempt from property taxes. And the main areas I work in, Arlington County, Montgomery County, which is nice.
I mean, there's a lot of military around here, so I mean, it makes sense that
And again,
you
that
see a lot of this. And
property
yeah,
taxes add up. That tremendously helps affordability.
sure, absolutely. Okay, so some of the downsides that people might not consider or know about when when they're getting a VA loan.
I
I
want
mean,
to
I'll
hear your
start.
downsides. Yeah. And then let me see if I can spin some of these as good.
Yeah, sure. So it's harder to have a very fast closing date with a VA loan because you're jumping through more hoops. What do you
Um,
think?
the only thing that's true about that is the appraisal. So there's the one piece of the VA loan process that can't be rushed. You cannot rush the VA appraisal. They are standard turn times. In our market, they can take anywhere from 7 to 14 days. But with a conventional loan, you can pay extra. You pay an extra 150 or $200 to say I want it back in 3 days. You can't do that with a VA loan. If it's going to take 7 days, it's going to take seven. If it's going to take 10, it's going to take 10. But to say that, most of our VA loans close in 21 days. So it's,
Isn't that the case for the home inspection too? You can't waive a home inspection with a VA loan.
that is not true. I don't know where you got
Oh,
that from.
oh,
But there are certain safety requirements of the appraisal process that have to be met, that may or may not have to be met with conventional loans. So, uh,
that's what I remember. It's like grab
yep,
rails and like
the
things
three
like
step
that,
rule.
right? That they're
Anything more
checking.
than three
Okay, so the
steps, you're
appraiser,
supposed to have a handrail. Yep.
so appraisers are checking that. So not a home
Correct. Correct.
inspector.
Yeah, the
Got it.
appraiser has to note things like that because when you're doing a VA loan, the appraiser has to be a VA specific certified appraiser to make sure that all of the requirements are met and the safety standards are met
So
for
let's
that.
go down that. Let's pretend there aren't any of those things. Then what happens? Like let's say there aren't grab rails and those safety things don't exist in the home.
So realistically, again, from my perfect world class that I was in, a lot of those things you can get exceptions on if you go back to the VA and ask them. But also a lot of lenders that are trying to turn loans around quickly don't take the time to do that. So in my case, I've done it a couple times and it have been successful. If it's something small and nitpicky that maybe the appraiser has noted, you can get an exception to not have to have that done. But if it is something that has to be done, you can have it done and then take a picture of it and confirm that it's been done separate from sending the appraiser back to the property. And as long as you've confirmed that it's been completed before closing it, it's not going to slow you down in the process.
So the buyer or the seller can put those things in.
Yes, the buyer or the seller can pay for any required repairs. There's an old
Okay.
myth that the seller has to pay for all of those, and that's simply not true. Uh,
Okay.
I've
I mean,
had
it's
I've had clients that have, that's part of, whenever you and I know this, that whenever people sit down and they look at a loan, a lot of realtors are going to try to stay away from a VA loan in our area because they have this stereotype that, it's going to be a difficult loan, but that's not true. So what I do with my clients and my agents, I try to go out of my way to make sure that they know that that's not going to be an issue. So if they're concerned that there's going to be some type of repair required from the appraisal, you know, we have those conversations. And if my client's happy to pay for those, we make sure they know that up front and they'll put it in writing in the contract so that it's not a burden on them. Just it's
mhm.
kind of leveling the playing field with a conventional loan.
I think this speaks to something that I talk about a lot on this podcast, which is that there's only so much you can control as a buyer who's putting in an offer, and that there is a lot of responsibility and opinion that comes from an agent. An agent's job is to effectively do what their clients want them to do. Right? We're not agents are not the ones making the decisions. However, we are giving advice and giving our opinions based on past experiences. So just like the appraisal situation I told you about, if we had a cash offer, for example, slightly less than the one we ended up getting with the loan, I might be like, listen, the appraisal process is very scary. This is what happened in my last, situation. And so that obviously informs the seller, right? Just like with the VA loans, if someone's had a bad experience with VA loans in the past, an agent, then they might not look at it as favorably and they might kind of pitch it that way. So it is very important that the lender who's doing that loan is your advocate and I always think a lender should reach out after an offer is submitted, um, because it just, helps build the bonds basically
Absolutely.
beforehand. But yeah, I think that that's something we should point out too, is if you aren't sure about, like, if it's not a VA assumption, right? Somebody who maybe not also is not familiar with they haven't listened to this awesome podcast episode we're putting out, then they need to be educated quickly so that they understand it's not necessarily a negative.
I 100% agree with you, and that's when you share your experiences, you're doing your job. You're educating your clients to the best you can based on what you've seen. You're telling them the truth. You're not lying to them based on a past experience. But I think that sometimes in our market, and I'm sure in many places, people may mix that up with a stereotype or a thing they've heard elsewhere. Maybe they haven't had a bad experience with a VA loan, but they may say that it's harder just because they've heard that it's harder and they don't really know. So
Right.
miseducation or being uninformed can hurt just as bad as a bad experience.
Yeah, totally. Yeah, as an aside, I hate it when I'm talking to my clients, especially new first time home buyers, and they're asking what can happen. And I literally am like, this can happen, that can happen, blah, 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 because there are so many different things that can happen. It depends on, the other lenders, the other agents, the other buyers. Are they writing love letters? Are they not? It's like,
Yeah,
what is their timeline? What is their, how much are they spending? What's their earnest money deposit? You can only control what you do. You can't control what pretty much anybody else is doing.
yeah.
So it's what makes it really, really complicated, especially in a market like this. Okay, so the
On that
other,
note, hang
mm-hmm,
on.
sure,
It bothers me sometimes when I have a client that's using a VA loaner that wants to, and they may come to me and say, well, my agent says that I should also get approved for a conventional loan because people may not want to accept my VA loan, and I'm all for exploring options, but when I sit down and look at it, a lot of times the VA loan makes more sense.
mm-hmm,
Um, and in this particular case, like we talked about, being able to buy before you sell, a conventional loan for this person would have extremely limited their budget, whereas the VA loan, almost doubled their budget, and they could still buy before they sold. The realtor kind of changed their tune on that situation and said, "Oh well, if you can buy non-contingent, let's go with this VA loan." So again, it's
sure,
making sure that you're educated and know all of the options and the features.
yeah. Well, hence this episode, right? The podcast typically speaks more towards buyers, sellers, investors, renters, but this is not a bad one for other realtors to listen to. Okay, so I will tell you another potential con, and I know you're going to agree with me on this one, which is that if you're buying in a condo, the condo building has to be VA approved in order to use a VA loan. And I don't know what the percentage is, but there are many, many, many buildings in DC that are not VA approved. And so that limits where you can use that loan.
That
You
is
agree with me,
correct.
yeah?
That is true. But
That is true.
conventional loans also have to have their condo building approved. Not They're
Mm-hmm.
not all approved. They don't always get approved. There's ways that people do that. Not every lender has the same standards as well. But you know, in my experience, most of the time the VA is willing to work with you to get a condo building approved, unless there's something just crazy about the litigation or something that's really bad for the homeowners. I've never really had trouble getting condos approved, especially in our area. And for those that do have something, whether it's a rental policy or something that doesn't allow for active duty people to be able to get out of their lease, or
Mm-hmm.
not out of the lease, but to be able to rent their property out or sell it, or if there's restrictions that limit them, um, then the VA will not approve the building, but they typically will allow a one-time exception for that person to buy in that building. So that, my client has had to sign something saying, I understand that it's not approved for veterans, but I still want to move forward with this purchase, and they're able to still purchase.
Yeah, I mean, and just so listeners know, to your point, conventional loans, they need to get approved. FHA loans, there needs to be approval for a building. So it's not like this is the only kind of loan that needs to be approved. It's just that, in my experience, there aren't a huge number that are VA
That
approved.
are already approved. Yeah,
Already approved,
exactly.
right. But, quickly, just so people know, the deal that you and I did work on, the building was not approved.
Correct.
And we went through and we got it approved. And yes, it took a little bit longer, obviously, for us to get that transaction completed. But we were in just a lucky position. It was the sellers were really looking for a specific offer, kind of, price wise, and we were willing to do that. And they had to kind of negotiate time. And so it worked out really, really well. But I believe this one might be wrong, but don't VA approvals only last for a certain amount of time? Or are they in perpetuity? They are approved.
To my knowledge, they're in perpetuity until something else comes up that may disqualify the property. So what's nice about
Okay.
VA condo approvals is you can go into the VA condo approval database and pull up any building, and you can see if there's a current approval, which is really nice. That does not exist for conventional loans or those type of options. So to be able to pull it up and confirm it 100% in that directory is nice. If you don't find it, that's when you have to start kind of rolling up your sleeves and figuring out what you're going to need to do to get it approved paperwork wise, and who's going to help you get those documents. That's the toughest part, is really just getting the documents. Once you get that paperwork to the VA to approve it, the turnaround times are usually pretty quick.
Yeah.
And when we say ours was not as quick, I think we still close in about 30 days, but maybe it was like, 3 or 4 days later. It was not more than like a week later than you probably would have with a quick conventional loan at that time.
Yeah, I don't remember it taking, I've done a bunch of transactions since then, so have you. So, so I can't remember the specifics, but I don't remember it being like we were particularly bogged down and, freaking out about anything. One more short question. Can co-ops get VA loan approved?
I do not lend on co-ops, so I actually don't know the answer to that question off the top of my head.
Yeah, I don't think you can.
I don't
But I
think
was
you
just
can
curious.
either.
Yeah,
If I
because
had to guess, but don't quote me on that one. That's one of those I'll come
yeah,
back to
well,
you and tell you the answer on the next episode.
yeah, we just did an episode on kind of co-op, condo versus co-op, with a lender who does co-op loans, and just based on what he said, I would find it very hard to believe that you can, just because of how you're buying into like a corporation,
Yep.
yada yada yada.
Yep. And this
But
stock.
well, if
Yep.
anyone's really interested, then they're going to be able to hit us up and ask, because, we're at the end of the episode anyway. And obviously, I'll be linking your information in the show notes. People can reach out about co-op VA approvals or anything else, really, if they
One
have
last
questions for
really
us.
awesome benefit for VA loans
Yeah.
is there's a very, very streamlined process for doing a refinance whenever that time comes. So you don't even have to
Ooh.
pull a credit report. There's almost no paperwork involved. It's really just adjusting, signing a few documents, adjusting the interest rate, no appraisals needed, very limited fees in that process, and they're very quick and easy to do. You just have to lower your interest rate by at least 0.5%. So very, very awesome.
That's also
people buying right
that's
now.
also huge, yeah, especially
Yep.
right now,
Yep.
because if you can refi out of your, let's say if they're in sixes now and they may be getting a 5, so if you can go from your 5 to a 4 or a 3% down the road,
Without having to worry
why
about
would you not do
appraisals or
that?
paperwork or any of that
Yeah,
stuff. Again, it's
yeah.
nice to do the interest rate reduction loan for VA.
Wow. Okay. Well, there you go. For anybody who didn't know about VA loans, or anybody who, is qualified and they're looking to buy their first place with a VA loan, hopefully we've given them everything. I think we went through all of it.
I think
But,
we did too.
yeah. All right. Well, Brandon, thank you again for being on the podcast. Really appreciate it.
Yep.
And we will
Thanks for
see you
having me.
soon.
Thanks.
Bye.
Bye.